What is going on, retail traders? Why are 73% of those who's trading the Euro USD short? Is that what the central bank of America, for example, told us to do back in March? Is that where the big money is, shorting the euro dollar when it's rising? What I have learned is that prices are led by monetary policy and economic activity. Who controls that? The central banks. You got it right. So we should actually follow what the central banks tells us as traders. So we should also read their reports. Now get back into March 2020 and see what they did. In March 3rd, they decreased the interest rates, adding the supply of market, decreasing the US dollar. 12 days later, 15th of March, they set interest rates to 0.25%, also added 700 billion US dollar into mortgage-backed security and bond purchases, increasing more money. Later on, the Senate added 4 trillion US dollar. All of a sudden, there was way more US dollar in the market. I'm wondering how that is going to affect the US dollar. Well, it fell. It is going to fall. It will fall. Because all of a sudden, there is way more US dollar in the market. What does that have to say for the market? 1. It becomes easier and more affordable to borrow money. For the banks that has all this money all of a sudden, because the central bank bought their bonds and gave money to the banks, they will now lend out money and invest them into the stock market. Because if you're holding a 10-year T-note for 10 years, you will only get 1%. But this is supposed to get 5% a year. So you need to go somewhere else. Subsequently, the central bank wants us to go to riskier assets as the stock market, as into real estate market, as into businesses, as into other assets such as gold, such as commodities, and spending our profits.
Nice.
Making us lending more money makes us spend more. Lending more money makes us invest into our businesses. And having more money, well, that definitely weakens the dollar because all of a sudden there is way more dollar in the market. For us as Forex traders, what are we going to do then? Well, we have a lowering US dollar. We have market going into more riskier assets as in Australian dollar, New Zealand dollar, euro, pound, Canadian dollar. I'm wondering if we should start buying that instead. Buying the Australian dollar, US dollar, for example. And that is where the big money really is. Because the Australian dollar has been rising 2,000 pips ever since 19th of March, 4 days after the US central bank said, hold on, we will give you plenty of more money to send this market back up again.
Nice.
So, you as a retail trader shouldn't be buying the dollar because the central bank that is basically controlling where the money flow goes is saying buy the euro dollar because US dollar is going to fall until we change policy. And when is this policy going to change? I don't know. Maybe a couple of years. It's going to fall and fall and fall and fall and fall and fall until they figure out, hey, this has fallen too much. There is too much economic activity. The market is too good right now. We will take it back. They want us to buy the Australian, buy the euro, buy the pound, buy gold, buy commodities, buy the stock market, invest into businesses. They're chasing them away from the bond market. So the central bank, who is providing the liquidity to the market, who is providing the direction for the market, we basically just need to follow them. And that's where the big money is, following the central bank. It means you do need to do your research. You do need to read some central bank reports until some years now, until they start changing their policy. That's what we need to look for. But if you don't understand anything at all, just look at the news. If It says anything about increasing interest rates. It says anything about stopping the bond purchases. It will be the end of the dollar fall. On the other hand, we also have stimulus packages, and there is more stimulus packages to come apparently. So the dollar is only going to be weaker. Now, this is the strategy given to you by the central bank. How does that really result into trading? Well, as long as your dollar, as example, is bullish, you will look for price at support. Okay, let's check then. This is 19th of March, the end of the bullish trend on the US dollar. Coincidentally, 4 days after the Fed says, hey, you might want to short the US dollar. And ever since then, the price has not been as low as that ever since on Euro USD. Now, am I saying that this is the holy grail? This is where the big money is? A bit. Because as we follow what the central bank wants the market to do, and subsequently then makes the market do that, we want price to rise. We want to avoid being in downtrends. We want to catch those, avoid being in downtrends. Because the big money has been, since May, in an uptrend. It has, in November now, been in an uptrend and until December. And you see some boxes on my screen? Yes. Those are the buy zones, buy zones, buy zones. And sometimes it doesn't happen. Sometimes there is a pullback. But do you know what? Buy zones comes again, buy zone comes again, and overall, we are more right than wrong. Do you need technical analysis? Yes. But the central bank gave you the big strategy, gave you the reason to start selling the dollar. They are the one giving you the clues to where to find money. Where's the price going to go? Well, there's a lot of psychology. There is maybe a lot of short-term volatility. Sometimes market is just taking profit. They're not selling, just taking profit. And as long as this central bank thinks it's going to happen, maybe for the next 2 to 3 years, we're going to see the continuation in the weakening in the dollar. Now, are you going to start selling the dollar right now? I don't know the future for tomorrow. What I do know is we are set up for a correction now in January, and we might get a better price. I'm not saying that this is going to rise forever, but I am very sure that we are going to be higher probably next year. On the better side of this, that is your direction, dollar weakness. So for me, it's very, very, very weird to see 73% buying the dollar. Just do your research. Read into what the central bank wants you to do. It has already given you the reason to short the dollar. They are the one providing the liquidity. They are the one providing the direction for the market. The banks are just executing it for them. They're not basically in the market, but they're just setting the promises for shortening the dollar. There is more stimulus to come. Where do you think that is going to send the dollar? Probably lower. All right. We are now coming into take profit zone, coming into profit season. We have now gained, what was it, $1,500? No, 1,500 pips on euro. We have 2,000 pips on Australian. We have 2,000 pips on pound. We have 4,000 points on gold and 1,600 on New Zealand. That is those only. I haven't mentioned the yens. I haven't mentioned oil. All right? What is your takeaway from this video? I want you to do research. Become the expert. Become content with doing research. Be your own expert and then providing the answer. And technical analysis, you only need to follow where the market is going when it's going higher. You don't need RSI. You don't need MACD. You don't need Bollinger Bands, stochastics. I don't use that. You can if you want to, But as long as it puts you into the trades when dollar is weakening and puts you out when the dollar is strengthening. So I don't have the price, I don't have the holy grail, but I'm just saying where I think where the big money is, has been, and is going to be, you know it, shortening the US dollar. So if you are buying dollar, please, please, overall, don't do those mistakes. Does retail trader do? That is one huge mistake, is not to read, not become the expert. And if you're following other people's signals, please, there's no need, because I want to trade with you for the next 20 years. You need to become the expert so you can tell me what your opinion is, and I want it to be based upon knowledge and expertise. So, until next time, boom. Let's trade for the next 20 years.